Top pick number one, Air Canada, looking as though they've sewn up transit now with their takeover bid.
So the first thing I want to say is I focus a lot on U.S. stocks, but we've seen, I think, a turn in the Canadian dollar that points to higher prices. So when we're buying U.S. securities, we may be fighting a currency headwind over the next 12 months.
A weaker U.S. dollar.
Weaker U.S. dollar, stronger Canadian dollar. So I think that's something to say off the top. So when I look at the Canadian market, when we look at Air Canada as an example, this is a company that's been in a huge investment cycle, building capacity. They are making a shift from an investment cycle and capacity to a revenue quality cycle. So they are likely to be able to improve their margins here going forward. You've got the loyalty program coming back inside the company, which puts them on par with some of the U.S. airlines that own their loyalty program. It could add a couple of $100 million in EBITDA this year, and they hope to double that over the next 3 years, which gives them a great growth opportunity. And then finally, they own all the hubs, and they charge fees for other airlines coming from overseas to hop through Canada and into the U.S., and they're getting great growth in that business. So we think that we can see good earnings growth, stocks behaving really, really effectively, and if anything, the WestJet privatization will likely make the industry more profitable because the new owners of WestJet are going to be focused on profit, not necessarily being overly competitive.
And they're sticking with that offer for $13 for Transat. Desjardins surprised since some of the Transat big investors have said, we want more.
Well, I mean, if they can buy it for what they're paying for it, they're buying it for less than the cash value of the business.
Whoa.
And then they will bring their own operational expertise and get some value out of the planes that they're buying.
CP Rail, you like this one?
We really like CP Rail. They're great operators, right? They have a couple of key growth themes in front of them. They've got a new deal on intermodal with a Chinese shipping company that can grow their intermodal by 10 to 20% per year over the next 5 years. Sorry, next 3 years. They also have very good growth coming from crude by rail. In this crude by rail cycle, the railroads have much better pricing power to be able to charge the right price for the shipping. The rails as a group are behaving well, and CP has an opportunity to add to its multiple versus the group. It's the only one of the rails that is guiding to higher earnings. The other rails have been guiding to lower earnings.
That's interesting. Actually, we should follow up on that on BNN Bloomberg. Honeywell is your final idea.
Yeah, still sticking in and around the aerospace and defense space and the industrials. So Honeywell makes instrumentation and connectivity to the internet. They are in virtually every different manufacturing platform when it comes to the different defense contractors. So you're not just buying Lockheed, you're not just buying Raytheon, you're going to get put into all of the different platforms. The Chinese airlines are all connecting their planes to the web via satellite. Honeywell has this equipment, and their home automation is doing very well. It's economically sensitive and very attractive.
David, thank you very much indeed. David Burrows has been our guest on Market Call. Thanks very much for watching, and we'll be back tomorrow at our usual time, noon Eastern time. Thanks for watching.